Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. MNP Limited sold 2,75,000 units of its product, 37.5 per unit. Variable costs are 17.5 per unit. Okay, which includes manufacturing cost of 14, selling cost of 3.5, whatever it is, it's variable cost. Fixed costs are incurred uniformly through the year and amounting to 35 lakhs, including depreciation of 15 lakhs, which we normally include. Okay, but then they tell us that we have to separately calculate cash break-even sales, in which case we won't include. Anyway, we will fill up the table as much as we can. Okay, based on our format, we know that sales minus variable cost gives us contribution minus fixed cost, okay, minus fixed cost will give us profit, okay, will give us profit. Now, we have rupees per unit and we have amount in terms of rupees. I'm just going to fill up the data that is available. Okay, we are talking about 2,75,000 units. A lot of this may not be even needed for the final answer. Okay, but it helps to at least put it into the table and then see where we stand. So 37.5 is what I have here. Variable cost is 17.5, which means that contribution per unit is going to be 20. Fixed cost we put in the outer column because it's not on a per unit basis. Okay, and we know that the fixed cost, okay, the total fixed cost is 35 lakhs. Accordingly, we'll put 35 lakhs over here. That's it. No need to calculate anything else. Now see what they want. Okay, calculate break-even sales quantity. When they say quantity, they mean in units. Okay, break-even point. All right, and maybe I'll write this somewhere down here. Okay, I've got an abnormally long table, so let me look after that first. Right, now with that taken care of, okay, and of course, please be neat, please be very neat, okay, draw lines with a scale, right? Now, I can just move on. I know that break-even point, break even, break-even point in terms of units, is equal to fixed cost, is equal to fixed cost upon contribution. Okay, that's an I, fixed cost upon contribution per unit, or what we call CPU. Where is this contribution per unit? Here it is. What is our fixed cost? This. Life is easy. Substitute and solve. Okay, so which is equal to 35 lakhs upon 20. Now, we can use a calculator and get the final answer. Yes, we can do that. All right. But before I even pick up the calculator, let me finish the cash break-even sales that they're talking about. Okay, so again, they are saying quantity. Quantity means units. Okay, and our cash break-even sales. Break-even, again, break-even sales is going to be a cash fixed cost. Okay, costs that I leave it up to you. Cash fixed costs. Okay, upon contribution per unit. Okay, so this time it's going to be what? What is my total fixed cost? It is 35 lakhs, out of which 15 lakhs is depreciation. Depreciation is a non-cash expense. Non-cash expense. So I'll subtract it. 35 minus 15 is 20 lakhs. So I have 20 lakhs upon the contribution per unit, which is 20. And I think life is easy over here. I can easily calculate 1 lakh, 1 lakh units as my answer to the cash break-even sales. Okay, so the cash break-even sales is 1 lakh. Feel free to write it. Cash break-even sales is 1 lakh. Break-even point in terms of unit or break-even sales quantity, okay, the way they call it, is going to be 35 lakhs upon 20. I'm not going to take my chance with, okay, doing it mentally. I will use a calculator. So I'm going to say 35 lakhs upon 20, and I'm going to end up with 1 lakh 75,000. And my answer will be 1 lakh 75,000 units. Okay, feel free to check the study material. I think you will get matching answers. Any doubts, feel free to ask.